Good afternoon and welcome to this session on getting the most out of price charts. Today is Thursday, September 15th, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be emailed to you, so you will be able to review the material again at your convenience. If you're new to attending Trader Planet webcasts, you'll be pleased to know that we have previously recorded sessions on our site at TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions will let Darrell know helps as he prepares future presentations, so we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right corner of your screen, and we'll stage the questions for Darrell to answer. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agriculture publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. Now, Darrell enjoys the seed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial contributions on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darrell, for that introduction, and we will reach you today from a decidedly cooler Wisconsin. We've gotten into fall already, and kind of overnight went from 87 degrees down into the 30s, and so we have some cool seasons to deal with, but you know, that's the way it always works. It's kind of like the markets. That's the way it is, and so you deal with what you've got. First of all, today, before we do get into the presentation, I want to talk to you about a couple of sponsors we have. I will be using Vantage Point Intermarket analysis to the charts, and also we are co-sponsored by Wassendorf and Associates, which are the publishers of SFO, which has a digital magazine online, also sells a number of books and other educational materials. So together with TraderPlanet.com makes a great pair for education and information if you're looking for any help in trying to determine how to trade. Well, a couple of things that we can talk about charts. I mean, everybody is probably familiar with charts that's in this audience. I know that in some cases in the past you kind of went seat of the pants, guts, you know, agricultural people were, you know, kind of looking out, kind of weighing the prospects of rain or other types of things on the crop size and all that kind of thing. But everybody today seems to be, at least if they're an active trader at all, aware of charts. And of course, when you get analytical software to produce those charts, you have all kinds of stuff you can do, and now we want to find out if some of those traditional technical analysis techniques, how do we fit those into that mix of technical analysis and try to come up with the best decision we can make. And we know that fundamentals are important. We know they are the ultimate driving force for prices, but how do you know what the fundamentals are doing to price? Well, you just kind of track them on the chart and see what is happening and where we are relative to past prices. Now, charts give an overall picture, suggest the type of market we are in currently, maybe how we might want to approach that market as traders in terms of time frame or style. We want to know if we're trend traders, intraday traders, swing trader, that type of thing. So the charts can give you that kind of an overall view. Now, you can just look at a chart naturally and get kind of a sense of the direction and of the strength of the chart. When you can see, the up, down, sideways movement. The first thing we always want to know when we look at the chart, what's the trend? First thing experienced traders will tell you, you need to know the trend, and maybe there's no trend, but that's the trend itself. Then you also want to look and see where the possible trend lines might be drawn, or where the potential support resistance areas are, where the previous highs and lows that might provide that resistance or support. How did the market act in the past at these levels, or at some of the psychological price levels that as they are approached? Now, markets tend to do what I term run and rest. the more volatile action days of a trend, and then you have the rest periods after that volatile time period where traders kind of seem to assess where they are, then take off from there or turn back, do whatever. But they need that little rest period in there, that little congestion area. It's kind of like, as I would describe it, like me doing wind sprints, although I do a lot more resting than I would running, because at my age, you can't keep up that run forever, and well, markets don't either, but you need to have that rest period to see at what stage, at what point you're going to break up to get that trading possibility. Now, the rest areas also often kind of come out in some kind of a congestion pattern. You've heard the names, you've heard pauses, flag formations, pennants, various kinds of triangles. There's a lot of other names that are applied to that. Maybe a sideways range with a smaller price range that are, the smaller range days that are called the collapse of volatility. And I may get jabs or spikes that go outside the pattern boundary, but that's the challenge of trading. You just kind of need to know the rest times, that where they are, and that they are not likely to last. Now, one of the helpful analytical methods that was introduced to the Western world by Steve Nissen about 20 years ago is candlestick charting. And candlestick charting, it's kind of become the standard today, but when you look at what we had to work with in the past, this is kind of a standard bar chart, line chart, whatever you want to call it. And when I began looking at markets and charts eons ago, we were looking mostly at bar charts like this. Some were in the point and figure charts, but the bar chart was pretty much the standard chart of the day, and in many cases they had to be drawn by hand at the close of the day once you had the high-low close. And you look at this chart, you can still see where are the highs. You can tell that the highs are still there. You can tell that the lows are still there. You don't have to make any exclusive type of a chart to say, well, that looks like a high, that's a lesser high, there's a low. All kinds of things that you can see just by looking at a standard bar chart. But in some cases, when you're looking at that chart, you might want to find out a little bit more about what is happening within the trading session, the main trading session, and how it looks, how it unfolds. So many traders have gone to the candlestick chart. The candlestick chart, which reveal a lot more information about a day's price action at a glance. You can see very quickly, you can see where a market is going to open. For example, we'll take this big white bar right here. The market opens right there at that price. Then you can see where did the market close. Well, the market closed up there. So you know that during that day, from the open to the close, the trend of the market was up. Traders were pushing it up. They show you, for example, also some of the prices that as traders were trading that they rejected. For example, here you see one of these long tails. The price dropped, traders rejected it, they closed it higher. So you can see there are a lot of different pieces of information you can get just out of looking at one single candle. And it could be, you don't have to have black or white ones like I do here. They could be red or green or any number of candles, ways you can set them up. But what you get a capsule of the day's action and a clue to where traders were interested in